Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you on what is I guess we can call it a quiet Friday morning. So to spice things up, we have brought on with us a guest host for the day, Luke Jacoby. What is he? He is Benzinga's Chief Revenue Officer. He is one of the longest employed people at Benzinga. So Luke will be with us throughout the show today, and we also have a guest, Don Hensley, Vice President of SpeedTrader. He'll be on with us at 8:35. Not a lot in the way of individual news, but there is some stuff to discuss. So let's jump right to it. Joel, what is the good word here in the overnight session?
7 handles and 93 and a quarter. For those of you who think 3004 is the high, you're wrong, because on Wednesday night and Thursday morning, we traded up to 3006. So there's your big target on the upside, 13 handles away, just hanging above the pre-market low of 93 and a quarter. Keeping an eye on that, things open up to your intraday low. So a lot of numbers here with the extra session from Wednesday night and Thursday. Crude in the red by 52 cents at 56.82. Gold in the red as well by 6.50 at 14.40. Silver joining in on the downside, down 7.1 cents at 15.26. And Bitcoin, let's just call the futures flat here on this. Well, I'm mixed up with my days here, Triple D. I don't know about you, but how you doing?
Lost. It feels like Monday. Does it not feel like Monday? Luke, does it feel like Monday?
It feels like a Monday, yeah. And Wednesday
feels like a Monday. So it's going to be weird because we're going to work today and then we're going to have 2 more days off. It's like, I'm a part-time employee here now. It's awesome. Right? This is what it feels like to be semi-retired. Right here, these last 3 days. So, okay, Luke, what'd you do on your July 4th holiday?
July 4th holiday. Let's see. I was here. Nothing super.
You were working. He was working at Benzinga. He doesn't get holidays.
But in my intro, Spencer missed something which I think is very important.
What give it to us?
And I don't even know if Joel knows this, but I was actually his first friend in Michigan. I thought that's how you'd open it up. It's
Toby. Me, my friend?
No, yeah. Your first day, we went out to dinner and.
Okay.
Luke was Joel's first friend.
No, Spencer's first friend.
Spencer's first friend.
Yeah. When he moved
Where'd you take him for dinner?
We went to Green Dot Stables. It's like a weird slider place where they have like a crocodile slider and stuff like that in Detroit.
What's a crocodile? Like, do you eat crocodiles? Is this a real crocodile meat?
Yeah, they change it up regularly. Like they'll have like a baked bean slider, like just weird stuff. So
I've never ate a crocodile. What's crocodile taste like? Sounds like it'd be tough.
It tastes like Beyond Meat. That's what it tastes like.
Like Beyond Meat. Well, let's come out with the Beyond Crocodile. We'll come in with real crocodile burgers.
And when was that, Luke? When was that Spencer, that you first met him and he was your first friend?
I'll tell you. It was September 2015.
Okay. I just give you an update. Spencer has a total of 3 friends now. He's got 2 other friends since then. Yeah.
I didn't know that. Good job, Spencer.
All right, so
we're gonna pick on Spencer. I thought we were gonna pick on Luke, but Luke spun this already. We're gonna have a pick on Spencer.
Yeah, I took charge early.
I didn't want to get. You know what? If you think you're gonna get picked on, that's the first thing you should do is pick on the other person. He's playing bully here, Luke. All right. So Luke, tell us about your trade, because we haven't had you on the show. We've had you on a long time ago. Talk to us, about your investing style here. What kind of companies do you look for if you're looking to make an investment?
Yep. So I'm definitely not the active trader like you guys are. But I love markets and I'm more of a long-term kind of guy. So super fundamental heavy, and always, like anybody would say, but looking for things when they get cheap. So, when the dividend yields get high, when the EV to sales are low, and they're just strong fundamental companies. That's what I go for. It doesn't always work.
On your radar right now, or is this bull market just made everything too expensive for your taste?
It makes everything tough, and even when things you think are getting cheap, they're not. Like GE is one I'm in from $15. That's not worth
value trap.
Well,
Well, I was in it worse than you though, Luke. I bought GE back at like 29 or 30, back in the year like 2002. I held it for 15 years and lost 50%. I finally sold it around 15 and finally gave up the towel.
Out of your investment portfolio?
Yeah, long-term investment portfolio. It's one of the first stocks I bought in my long-term investment portfolio because I started trading in 1996, but I started with Bright in 1999. Started, making, my living, and obviously, starting to invest and started an investment portfolio and probably around 2000. And everything I bought in 1999, 2000, long-term investments, those were terrible because the market crashed after that. But GE, I believe it was like $60 back in the year, like 1999 or 2000. And it came down significantly after the tech bubble burst. And I think I bought it. I thought I was getting 50% off. So getting a good company. I bought GE like $30. This was maybe 2002. And it's just basically been hanging there. Obviously, the financial crisis went down to $6, came all the way back up to 30. Now it's back down here at 10. I don't know. I was in it for 16 years. I thought that was long enough if you're a long-term investor. Apparently, it wasn't for General Electric because all I did was lose half my money.
Yeah, but I mean, you've gotten dividends for 50
Well, and there is a point there. I did get paid a dividend for a long time. So maybe I did get some of my money back out of it. And sometimes I argue with people, because it was obviously a terrible investment. But I guess I did get paid some dividends. So there's the one thing. That's a nice thing about dividend investing, right, Luke? Because when you're looking at it, it gives you some protection. I mean, in a sideways market, if you got a stock giving you 4 or 5%, that's not that bad.
That's like Ford. That's another hometown favorite out here in Detroit.
5.87% dividend. Do you own some Ford?
For years. For years, it's been paying that dividend. The stock's just gone straight sideways.
Or down. Are you in Ford?
A little bit in Ford. But
tell us about your stocks. So you got GE, a little bit of Ford.
A little bit of Ford.
Snap
is a big one that I had.
What else you got? What else are you eyeing?
All right, let me pull it up.
He's bringing up his portfolio. Excellent. We like this.
Yeah, dude, I'll pull it up. We'll do it live.
What about while you're looking for that? Do you go for any momos? Do you go for do you have any of the big guns? Because I can honestly say I do not have, little small portions of like Apple and Google and some portfolios and stuff. But man, I've just been so hardcore 4, 5, 6% for the last 20 years. I never really got on the train. Do you got any of the the big tech, the big momos?
All right, the crazy momos like the Beyond Meats and stuff like that. Those scare me. I don't know. It freaks me out.
It's good. Good to be scared of those stocks.
But like the big ones, like the Apple. I've owned Apple for years. Still own Apple. Google, another one. And thinking about long term, right? It's okay. What are the companies that we're going to be using in the future? And Google is one of those. Like for Benzinga, for example, our entire tech infrastructure is split between Google and Amazon. We write them a big check every single month, and there's thousands and thousands and thousands of businesses across the world that write them those big checks every month. And if we wanted to move off of either of them, it would take years. I mean, we're so entrenched. Those are the tech stocks that I like.
That's what I like hearing is, what is the big companies, what are they writing the checks to? Because I completely agree with you. I don't own Amazon because it's always been a valuation issue for me, but at Google, I love Google because I think it's everywhere. The value is actually reasonable, the valuation. It was never, you're not paying 80 or 100 times earnings for it. Even though Amazon, obviously, if they paid out all their profits, could have a lower PE as well. They're still investing for growth, obviously. But I still think Google is the company. It's one of the longest. I've held it for probably a decade here now. Plan on holding it forever. I love Google.
And like thinking about it, from business services, right? So we pay it for Gmail. If we ever wanted to switch off of Gmail and go to like an Outlook or, whatever the new tech is, it would be a nightmare. I mean, it would be such a headache to do that. Whereas Zoom, we pay for Zoom, but if we wanted to switch to a different video conferencing, I mean, the very, very low switching costs comparatively.
We just did it. Skype. We went from Skype to Zoom very easily.
Wait, exactly. Luke, what about Twilio? We also use them heavily.
We use Twilio. Twilio's got amazing technology.
What do we use Twilio for? This is the Benzinga. This is behind the scenes of Benzinga.
Yeah, exactly. We'll go through our bills.
Very well. We're going to go through the Benzinga bills.
Okay, so Twilio we use to send real-time text alerts. And email. So they built an incredible infrastructure where if we ever want to notify somebody, like a user, about something, Twilio does the rest of the work. So we don't have to figure out how to connect to AT&T and Verizon to send an SMS. They do all of that for you. It's basically you tell Twilio, here, this is important, and then they shoot it out. So that's what we use them for.
What about Bitcoin?
Bitcoin?
Are we gonna start paying our bills in crypto?
I don't know. we have. I will say though, we have gotten several companies who've tried to pay us in cryptocurrency. Believe it or not.
So we got to start accepting crypto.
Haven't accepted it yet, but there are people asking. And yeah, the Bitcoin one. All right, so I have some Bitcoin, some Ethereum. It's been a nice hell of a run. I got in on the eve of that first run up that we had. When was that? 2 years ago or so?
Yeah.
When it plummeted, it was worth so little. I was like, all right, it's not even worth selling it. Now it's getting back up to those places where I'm like, all right, okay.
Get my money back.
Yeah,
I get excited again.
Exactly.
We also use Slack, obviously. We talk about that a lot.
We're using it right now.
We're using it right now.
I don't look at it enough, though. They yell at me for that.
And I've tried to check out the Microsoft competitor to Slack, and it seems like so simple, like it's just like a chat service, but there are so many things that Slack has figured out in terms of how we communicate as human beings and making things easier. It's like hard to pinpoint what specifically it is, but even just from being able to have favorites of conversations and how it alerts you when there's something you need to take a look at. Slack has done a great job with their communication tools.
Would you invest in Slack? Would you invest in the stock, or it's just the valuation issue is going to be there for you again?
So I like the company. I don't know about the valuation though. I haven't taken a dive in.
Okay. It's only been out there for 9 days, so we'll give you a pass on that one. So let's jump into some individual stock news. There's one big headline that they snuck in. Well, I guess they didn't sneak in. Friday, or I want to say Friday because it feels like a Monday, but Wednesday afternoon, Qualcomm. Spencer, I want you to go grab this headline. Came out around 3 o'clock, and the judge didn't give them any love there. What was that headline?
Yeah. I am also, because I was out of the office by this point, so it's like, any news that happened at like 3 after
Only
2 o'clock on a Wednesday.
I was sitting at my desk until
don't have
5.
it.
You could trade till 5. I traded till 5. Actually, it was a good afternoon. Anyways, Qualcomm. I tried to trade this a little bit there too. With the headline, do you have it in front of you? It should be in the front.
Well, the only headline is you just said it basically, is that the judge blocked. Remember we talked about the ruling against Qualcomm. Yes. Then they had asked the judge to put this ruling on hold while they kind of figure their stuff out, and I expected the judge to say like, nah, we're not going to do that. I'm going to abide by my ruling. That's what happened. The judge said on Wednesday he's going to abide by the antitrust ruling. The delay that you asked for, not going to happen.
Yeah, so stock trading down 2 points here in the pre-market. That is your catalyst. It was trading down almost 3 points on Wednesday afternoon, so they bounced a little bit here. I sold all my Qualcomm. It's not very often I get to sell almost the high of the move, but I did. I missed it by about $1, but I had intended to sell it that morning. QCOM, I'm talking about Monday morning when everything was gapping up, and I said on the show, I was like, it's too much, too fast, and there was still the wild card of obviously, this appeal and what's happening with this antitrust issue here. So that's why I got rid of my Qualcomm, and I'm happy I did it. I almost got my money back too, which is impressive. So loss aversion there at its best. Qualcomm came back, I'm out.
A couple quick things here. One is, what a nice gap fill. You had the original news that knocked it down. You had the rounding bottom, and then you came back up and filled the gap. So, if you look at, we talk about gap fills over the longer term, you got that, and then it reversed hard. Now, just what I'm looking for, we basically went from 65 to 81, 6-point move. 8 of that. This thing's got to find support at 73 and hold 73. You haven't hit that yet in the pre-market or after hours trading, but man, just a lot. What a headline. If there's not a more headline stock out there than Qualcomm, between the Alpha saga and this. So that's what I'm looking for. 73 and change here. That's 50% of your run from 64.76. What it was probably closer to 82. So you guys can work the numbers on that. No, it was closer to 81. You can work the exact numbers on it. But that's my thoughts on Qualcomm.
Luke, this is your definition of a value stock here, though. This might be one that you would eye up. I mean, the PE bounces around a little bit because the earnings are cyclical, but the dividend's 3.33%. They obviously did get the good contract from Apple, which is why I had the big run up in April. Sold off on all this antitrust stuff back in May, and now it's come back a little bit here. What are your thoughts on Qualcomm?
Yeah, and it is a crazy headline stock. Like keep in mind that all the Chinese stuff too. With Huawei, I mean, it's $100 billion stock, and it was up, I think, 6% pre-market after G20.
Yeah,
I mean that is a wild move. I personally am confident that the China thing will get worked out. I think there's a lot of talk and a lot of balking and a military parade that we had in DC yesterday. But
interesting.
I mean, if that stuff gets figured out, I mean, there should be room for Qualcomm to run.
So you kind of like the stock. We got to pull back here. We're 6 points down from where we were trading just on Monday. I like it in the mid 60s. I don't know if you're going to get back there, but I played this a couple times. I had it from 51 to 70 one time. It came back down. I bought it at 55. I sold it at 68 way too soon, and then I chased it for whatever reason and bought up at 82. I never make money in my investment portfolio chasing stocks. I make it trading stocks, but when I'm chasing in my investment portfolio, it's almost always a bad call. It obviously was. I bought it like 81 or 82 thinking it was going to go to 100 because it had the wind in its sails now, and then it came completely out with that antitrust issue, obviously, back in May. So it came back up here. I was able to limit the loss, and I'm happy to move on, at least for now. But I still think there's value here down in the 50s and 60s.
Dennis, how often are you trading in your investment portfolio?
Too much.
Oh,
Too much. I try, and this is such a hard thing, to separate trading from investing. Obviously, it's different accounts, so you're trying to not to look at it, but I kind of know it's in there. I'm sitting in front of the screen all day. I know what I have in my long-term portfolio, and when you're seeing something really take off for you, it's hard not to book those gains. Or when you're seeing something really beat you up, it's hard not to say I got to cut this loss. So I mean, it's difficult, but I'll tell you one thing, Luke. My best positions that are in my long-term investment portfolios are the ones I didn't trade. So, it's the stuff that you've held for 15 or 20 years. That's my best stuff. I own a lot of ETFs in there. I don't trade those. I just hold those. It's the individual stock stuff that I find I trade too much. And, maybe it's because I talk about it on the show too, that I'm even thinking about it more, because we do full disclosure here. So I'm always talking about my long-term portfolio as well. So probably the show hurts me in that way, but I try not to trade my long-term portfolio. What are your thoughts here? I mean, a lot of people do trade their long-term portfolio. I find my portfolio does worse when I overtrade it.
I don't. I'm, very diligent about keeping up what's going on. I'm several times a day. I'm just in there checking out prices. I'm always watching the news on the stocks because, I love doing it. But I'm pretty good about, okay, if I have a thesis, I'm going to stick to the thesis. If I'm getting hammered in something, okay, time to get out of there. But I'm pretty good about, $1, $2, $3 not dancing around there.
I mean, how do you, what about you, Joel? I mean, you're on the show.
I've said it for years. I just don't sign in. I don't look.
You don't look. That's the best thing you can do.
But Dennis, you got like 140 stocks. I mean, I have some individual stocks, but I just have very conservative, dividend.
We never hear about the long-term portfolio of Joel Elconin.
Because it's boring.
That's a couple ideas. Well, boring is good. I like long-term boring. So it sounds like Luke likes boring too. He likes value stocks. Long-term boring makes money. Give me a couple of your stocks that are sitting in your long-term portfolio.
All right. The couple individual stocks that I have, I've been holding on to Twitter since 17. I don't know what the hell to do with it. Yeah, it's going on. Been nowhere. Lisa is usually the one that makes a couple calls in the medical center, and I don't look at these because they just go up. Dexcom. She loves Dexcom. We've been in that for a couple years, related to diabetes equipment. I think her best one is Exact Sciences. I've been in that for a couple years. So if I look at those charts at any single time, I will sell them, but I don't. So
that's the best thing is not to.
Yeah, my big loser, and I know you got out at 50 or whatever. Kraft Heinz is one I kind of let get away from me.
Value trap. It was a value trap.
Yeah, that gap. So now it's, it was part of now it's a smaller part of my portfolio. And then, some I just have a few other speculative ones in there in my IRA that I'm hoping for something to happen. What's that one you got me in, Dennis? That
Oh, it's terrible. The
yeah,
Stars Group.
yeah,
TSG.
TSG.
Yeah, that was.
Oh, look at
So
that.
me and Joel were, the sports betting play. This is going to be the one. And
We're
it came
early.
Pop up. We could have almost got our money back. We had to sell that. When stocks are in downtrends and they get those nice 20, 30% pops, sell. Yeah.
And the other stinker I have is these are small positions. Is that and you told me not to buy this one. LQSIF.
Oh, a little marijuana play.
Yeah, the Canada marijuana play. They're going to be selling the marijuana. So I just thought that would, but that turns out to to be a debacle.
We've all get stinkers in our long-term portfolio. The one thing I will say, and this is what investors do wrong, and this is kind of a good day because it's kind of slow to talk longer-term investing. We got Luke to get some different opinions on here as well. But the one thing that long-term investors do wrong, and I see this again and again and again, is they sell their winners and they hold on to their losers forever. And I will say it's okay to hold on to your losers, but you got to hold on to your winners if you're going to do that too. My long-term portfolio, I have a lot of big losers, but I've also got stocks that I'm up 400, 500, 600% on. Those make up for it. But if you're always taking every winner when you're up 5 or 10%, but holding on to your loser until it comes back, eventually your long-term portfolio will be full of losers. It's the law of math. It has to happen because you're going to make a bad call here and a stock is not going to come back. Maybe 9 out of 10 times it does, but then you get the one that doesn't come back and then you're stuck in that one. Then you put another one in and eventually get stuck in another one and eventually get stuck in another one. And eventually all of your long-term capital is tied up in losers. That's what people do wrong. Is they're cutting their winners very quickly, taking the quick gains, and then holding on, and it's called loss aversion, obviously from behavioral finance, is they refuse to take the loss. Like think about even when we're at the prop firms and people come in and they say, I've never had a losing trade. Well, no, that's not true. You've probably never taken a losing trade, but you've had, and you probably are sitting on a bunch of losers here right now. So in a bull market, everything seems to look better. It's how you survive those bear markets as well. I mean, right now, a lot of stocks have come back, and probably 9 out of 10 stocks have come back. We're at all-time highs. We're at 3,000 on the S&P. But, how do you survive in those downturns in 2007 and 2008 and 2009? From a long-term investing standpoint, you can survive a long time if you're not on margin. That's why the other thing I don't do is I don't invest on margin. I trade on margin, but I don't invest on margin because in an event of 2006, 2007, where the market falls more than 50%, you can blow out your entire account.
Yeah, and something that I'll advise too, if there's any newer people, newer to markets listening in, is start small. Even with an investment portfolio where you're picking individual stocks. I've blown up 4 accounts, I believe, in my investing career. I opened my first brokerage account. I think it was the year between 8th and 9th grade that summer. I saved up about $500 for my summer job, and my dad had to walk me into the Scottrade office to open a brokerage account. And I did all of the special tricks. I did the penny stocks. I bought the patent trolls who were suing Google. I bought all these crazy things. I shorted stocks that were up 200% over 2 days. And I learned a lot of the what not to do. And I tried it with the paper trading, beforehand. I know that a lot of people advise, do paper trading to get your feet wet. But I found that it's totally different when it's live money in it. And, all of the rules, principles that I learned from the webinars, totally out the window. And so, I'm glad I hammered out a lot of those kinks in the high school, college years. And I've been holding on. My current long-term portfolio I've had since June of 15 now. So
you're holding on. You haven't blown that one out yet.
I have not blown that one out yet.
And you're going with value stocks. You're probably gonna, do a little bit, or you're probably not blow it out if you're using value stocks, not jumping in the Beyond Meats. But a couple great points you're making there, Luke. One, I completely agree with you with the paper trading. This is something, that people say, and I hear this from, people who are educating, and they'll say, okay, do paper trading for a while and see how it goes. I will say with, Robinhood, with Webull, with all these cheap solutions that we have for trading, why do any paper trading at all? I mean, you can go on some of these on commission-free trading or very low commissions. Get your feet wet because it's completely different when it's real money. Even if you're only, playing around with a couple $100. put real money on it, because then on the whole psychology game comes into play. Then the whole slippage game comes into play. Everything, you think you can get these prices, but can you really get these prices? You go send your order, maybe you miss. You're learning how to actually transact and make executions too. So I would say with, as cheap of commission structures that are out there now, we are in an environment that there is no need to paper trade whatsoever. Just play with small money. Start small and get your feet wet, but play with real money so you can get all that real stuff that you're talking about there, Luke, because it's a lot different if you're just trading on paper.
Absolutely.
And I just want to throw in there that, we're not exactly sure of our demographics of the show. Obviously, we have some very, very experienced traders. We have some newer traders, scalpers, mobile players. But whenever I talk to young kids, I remember talking to a couple kids at, I call them kids, but they're my kids' age at Benzinga. When you're at an early age, do something, start something. I mean, if it's $50 a month, get some skin in the game. You can buy ETFs for no commissions. Just do something, so you're following it and you have some skin in the game. And no matter, whatever amount it is, how much you make, just start doing something, and then you can learn from that. I know a lot of kids are, youngsters, or their parents got burnt twice, and the portfolio, they're like, oh, I'm staying out of this market. Just get your feet wet. Just do something. Get invested and follow the market. But we got a jobs number coming up here in 3 minutes. Do we want to actually cover a stock besides?
I think we should preview the jobs number. There isn't that many individual news here today. Spencer, if you've got the preview here, because we're 2 minutes away, I am actually going to slip off and let you guys, because I might be trading this jobs number if there's some volatility here. And I think there could be some fireworks.
I doubt. I bet you he'll be back in 2 minutes, but let's see. So the jobs number, we are looking for 160,000 jobs added in June. Remember, we had that soft number of 75,000 jobs added in May. Unemployment expected to stay at 3.6%. Those are the two bogeys here: 3.6% and 160,000 jobs added in June. We got about a minute and change. Let's see what we're going to get.
Commentary from me: the market wants a bad number. They want a really horrible number, because that will confirm interest rates are going down. Some people are talking about a quarter. Some people are talking about a half at the next meeting. I will be seriously worried if they cut rates a half. I mean, I think they should sit still. So the market wants a bad number here. A bad number means we're going to be consistent with the rates going down. I've been wrong the whole time about this. But I'm sticking to my story, man. I don't think we need an interest rate cut at all. Lukester, what do you think?
Yeah, I'm on the exact same page for you. What makes me worried is what happens when we get into like real bad economic zone, and then we're out of tools. There's nothing for us to do. We're just holding out. So that's what makes me nervous.
Okay. All right. S&P futures trading in the red here, just off the low of the session. 92.50 is your pre-market low. I have a little old number at 91.25. I'd only cover a short there. I would not try and go long at that area. On the upside, if you get a bounce here, mid-range on the session would be 98.25. So you might find a few offers there. Your all-time closing high from Friday is at 3,000.25. I can't get used to saying that. So there's some levels. I think the pre-market high, or that high from Wednesday night, is safe. That's 3,006. But we're just going to be bouncing around here. Spencer with the headline number: jobs report imminent.
Remember, 160,000 and 3.6%. Those are the two numbers that are most. That the market. I'm seeing a beat. Let me see here. If someone beats me to it, you can feel free to shout it out. But I'm working off one screen today, so
I will get it.
224,000. Holy moly!
Oh, no.
Ooh.
Well, that's not what they wanted, right? So 224,000 jobs added last month versus 160.
By the banks, interest rates that we're going to go back to raising rates is what's going to happen. This economy is so strong here. The banks should be popping off this. I see Bank of America up 13 cents at 29.18. We did hit that pivot number at 91 and a quarter. We talked about it as a place to potentially cover a short. Well, you got that chance right now. If you're going long at this area, man, Friday's intraday low is a good 10 handles away. So if you want to give it 10, 12 handles on the downside, potential long area, banks are moving up. I think this really fits our scenario, Spencer. I mean, Luke, you've been on today. I mean, this is what we've been talking about. Is the economy that bad?
Well, we did have unemployment tick up from 3.6 to 3.7. Does that matter for anything?
I mean, look at it, historical circumstances here, right? I mean, 3 under 4. I mean, here we go. We're getting a little bit of a pop here. Now now it's good. We got a good economy. We don't need to raise rates. So there we go. We got the rally, current low 90.75. Next level, I'm looking at mid-range on the session at 98 and a quarter.
So I've got Bank of America up on the screen. They popped on that.
Yep. And I see Goldman Sachs. I mean, they're popping. They're not. Actually, I see the SPOOs moving. But I'm looking at my top components here, and it's kind of like, they're just kind of not moving at all. So they're trying it. They're trying to rally the SPOOs. Where do we get to on that little pop? Lo and behold, where do we get to? We got to 97 and a quarter. I was hoping for 98 and a quarter. So they're setting up some early levels. Spinner is pointing out gold, kaplooey. Can we hold 1,400? Actually, 1,400 is not your good number in the gold market. It's a psychological level. But for all you gold bugs out there, keep an eye on 1385 if we get there today. Pair of lows on July 1st and July 2nd, right there, 84.70 and 86.20. The pop is being faded here. Bank of America staying green here. Folks, this isn't what the market wanted. I think just overall, I don't know. Next month, are we going to get revisions? I think, let me be the first one to say it. This takes the July rate cut off the table. Off the table right now.
It won't be off the table, but it's again what we've been saying. Why do they need to cut rates? I'm flabbergasted that it's gone to this. I mean, Chris Irons said it. It was an interesting at the Benzinga Trading Summit. It was an interesting presentation there because he's a colorful person. But he was saying the same thing that we've been saying all along. I can't understand why we've all of a sudden went from this market where we absolutely had to be lowering or be raising rates back in November and December because we were hot, and then the market just implodes and everybody gets scared. Now we have to cut rates. I cannot understand the 180 that the Fed has taken because the data's not there. We're at all-time highs. It makes no sense to me at all. But anyways, the market still believes that we're going to have a rate cut here, and they're expecting it. I don't understand it.
And Dennis, did you end up trading anything, or was there anything you were watching?
Banks a little bit here. I tried to pick up some banks. Okay. So right on that number, and well, you're doing your best to pick up banks because obviously everything goes pretty quickly there. But it was a little whipsaw. I mean, we had a decent quick pop. So here you're seeing exactly what Joel was saying. Buy the banks. I mean, that's what the market is doing here this morning. The only thing that I'm seeing really go green really on my screen here now is the banks, because this obviously says, hey, maybe we don't need to cut rates, like Joel's saying. I still think they're going to, but maybe they're not going to be cutting after that. Maybe we cut it in July. Maybe we don't cut it after that. So it definitely is good for the banks. And you can see this popping up here. Obviously, this morning, the banks are lifting. We can look at JP Morgan lifting here right now in the pre-market. We can look at Citigroup trading up, Bank of America trading 0.5% up. They were all trading slightly red. I mean, when the market's down, the banks are up. That's what you're seeing here happen this morning. You're seeing utility stocks, defensive stocks, higher yield names getting hit here just off this number, which is expected. I mean, that's what happens. When you have a jobs number that actually looks, like they don't need to cut rates.
We get a comment in the chat, Triple D. Why is a rate cut still in the cards? Because the rest of the world is slowing. Well, we're not going to be dealing with the rest of the world, right? We're not going to be trading with the rest of the world. We don't need the rest of the world. So why should we lower our rates to help the rest of the world? It's obviously not going to do it. Us lowering rate is not going to help Europe. It's not going to help Japan. And we just got to focus on our economy because we don't need to trade with anybody. right? We have our own separate economy. So I don't know. I mean, if anything, we've seen that us lowering rates is not going to help Europe. But we got a guest on here at 8:35, Spencer.
That we do. New guest for us, Donnie Hensley, Senior Vice President at SpeedTrader. I want to bring him on right now. I believe he was at the trading summit, although if he was, I didn't get a chance to say hi. Donnie, are you with us? Oh, his mic is on mute. Let me see if, oh, that's better. That's my fault, Donnie. Are you with us?
Yeah, I'm here. How you guys doing?
Good morning. Good morning. How are you?
I'm very well. Thanks for asking.
Okay. What's your reaction right here? Hot number.
Well, it's funny because Joel was talking about how the market wanted a bad number. I think, Dennis made a strong, case for a July rate cut. I think that when we're talking about interest rates, there's a lot of traders that feel as though, suffice it to say, that we're at a point of inflection. Okay. What does that mean? It's when, a trend either goes up or down, right? I mean, that's kind of sort of where we're at. So if you feel like this is likely to happen, that's one thing. You may be saying to yourself, the data suggests a move in either direction. How do I trade this? This type of directional uncertainty is likely to make well-informed, well-seasoned equities traders kind of sit back on the sideline and watch how this shakes out. But if you're an options trader, there's a way for you to position yourself to profit in either direction. So if there are a few symbols that you're tracking and you're worried about sharp moves as a result of including but not exclusive to interest rates, for example, you may want to check implied volatility. All right. If the implied volatility is not too expensive and you're comfortable with these types of trades, do your research on being a buyer of a strangle with out of the money options or a straddle within the money options. So real quick, for the beginners out there or folks that are not really new to some of the trades that our guys do over at SpeedTrader, with a long strategy, with a long strangle, this strategy typically involves buying an out of the money call, an out of the money put with the same expiration. This does best if the stock price moves sharply in either direction. You would have a very positive impact on this strategy. If the stock price holds steady, a quick rise in implied volatility would push up both options, which is what you'd want to see. Now, a straddle, on the other hand, again, combo of buying a long put and a long call, long put combo. But what traders look for here is to produce a position that would profit if, again, the stock price moves up or down. So if you're not familiar with options or you have not done this already, go to the OCC.com and download characteristics and risks of standardized options. It's also known as the options disclosure document. At SpeedTrader, we have a lot of traders that take on this type of strategy, and with pricing as low as 30 cents a contract, Lamppost Capital and Volex routes are free for you guys to use. And, this might be a way for you to hedge your bet against the interest rates that, either, long or short in either direction.
Donnie, how far out are you talking about for these contracts?
Well, typically with some of these, you might want to go 45 days. Again, I'm not an advisor, so I can't tell you what to trade. I can only tell you what a lot of our traders look for.
All right, so that's around the jobs number. Let's step away from that for a second. Let's step away from interest rates and all that for a second. General market thoughts here. Closed at all-time highs in some indices Wednesday at the bell there. And just general market thoughts here as we sort of head into the doldrums of summer.
Well, the general market thought is, for me personally, and again, I can't speak for everybody, but for me personally, we've seen a lot this year, okay? A lot of people feel as though the market has room to grow. There's a lot of factors that will support that. There's a lot of people that feel as though we're going to be a bull market for a very long time.
Joel, you with us?
Sorry, I was looking for that mute button there. I had it on mute. I did it. Haven't done it all week. Donnie, thanks for coming on and joining us here. Tell us about your firm and, tell us about, the demographics of your customers and, experience. Is this something for experienced person, inexperienced person?
Yeah, it's a great question. SpeedTrader has been around since 1999. We're a direct market access broker. So what that means is that we put you directly on the order book of the exchange. We cut out the middleman, commonly known as the market maker. And people do this for a myriad of reasons, but the two main ones I've seen, first and foremost, is a better fill, okay? Yes, there are brokers like Webull, there are brokers like Robinhood that provide an awful lot of value to their customers, and I think that that's fantastic. However, if you're looking for price improvement, on a 20,000 share order, if I could improve your price per share by 1 cent, that's a win. So as far as I'm concerned, what would you rather have? Would you rather have free, or would you have better price improvement or the opportunity for? So that's the main reason. The second reason is for the rebates. So should you trade a limit order on ARCA or INET, you will be rebated on those orders there. And if you're trading at 30 mils a share, 40 mils a share, whatever your commission structure is, depending upon your volume, but you're rebated at 20 mils a share, for example, like ARCA, that's a huge asset to a lot of traders and their arsenal for looking for profits in the markets.
I thought Dennis wanted to go. I guess he doesn't, so he's too busy trading. So I will keep going here. Don, give us, I don't know if you can give us an individual name, or if not, a sector or industry that is specifically on your radar here for the next couple of weeks.
Yeah, sure. So again, I'm not an advisor. I can't tell people what to trade. I can only tell them what to look out for. However, that being said, just as we just spoke about, I mean, look at the banks. Look at what's going on there. The interest rate move in either direction is sure to be a factor in some of those trades.
And is there anything in particular that you're seeing from your traders? Has there been, as we're hitting these all-time highs, are they doing anything different, trading more, trading less, picking any sectors, anything along those lines?
I wouldn't say that they're trading less. What I would say is that they're trading a little different. With the all-time highs, what we've seen is that a lot of guys have gone short, especially on the all-time highs. And I think with a contrarian view of the markets, or a contrarian strategy, I should say, that's you're well within your right to do so. But what we've seen lately is a lot of options plays. We've seen a lot of guys that have been long a particular security that are writing puts along the way up. Okay. We've seen guys that are short, a security, but instead of actually shorting the shares, what they're doing is they're buying puts in an effort to hedge their bet in either direction. So I'm not sure if that's a case of, market indicators or why people are trading the way that they are. I can tell you that this is a really interesting trend, and I'm really interested in collecting data and figure out where these guys are coming from with this, because I think it's absolutely fantastic. Anytime that you can trade more confident in what it is that you're doing, I'm a fan of that, and I think that's awesome.
Donnie, before we let you on, is there an account minimum you need for SpeedTrader?
The account minimum with us, because we're direct market access, is 30,000. Okay, if you're falling a little bit short of that, email me directly, and there's something that we could work out. But we like to see accounts at 30,000, and the reason is because we cater to the pattern day trader crowd. Excuse me. These are guys that step into and out of the market many times throughout the day. As you know, if you're less than 25,000, you're pretty much limited to 3 trades in a 5-day period. I mean, I've got fellows with us that trade well over 70, 80 times a day. So with that having been said, we really need you to be above that level in an effort to execute that strategy. However, if you're swing trading, there is something that we can work out. Just shoot me an email, dhensley@stockusa.com. I'd be more than happy to talk to you about, anything that you need.
And since we were talking about sort of our first time portfolios, our first trades back earlier in the show, is there a mistake that you see? You have more experienced traders on the platform, but is there a mistake you see most common amongst the newer clientele?
Well, I think the mistake that I see a lot of traders make, and this is really common with new clients, is what I call FOMO, or fear of missing out. These are guys and gals that'll trade too much, or they just don't want to admit to themselves that the play may be over. Okay. Again, this isn't really people that are swing trading. This is, scalpers, fellas, and stuff like that. So I would say that you would need to trade more confident. Now, listen, I know that Dennis talked about, how paper trading is not the same as a real account, and he's 106% correct. That is true. All right. We do offer paper trading accounts there for folks. We offer a free demo of our platform. But what I would say is get to know the routes, get to know what each route is used for. If you're doing a market order, you should be using an inverted ECN, right? So, I mean, there's all types of different ways that you can go after your strategy. Don't go into the markets with a handful of plays and expect to make all kinds of money, you could find yourself really disappointed.
All right, Donnie Hensley is the Senior Vice President at SpeedTrader. Donnie, thank you so much for the time today, and have a great rest of your weekend.
Fellas, you too. Thanks again. Bye-bye.
All right. 8:45 here, excuse me now. Luke, we had a question from our chat from earlier in the show. I wanted to ask you before I forgot. Do you remember the first stock that you bought?
The first stock that I bought was Halliburton, HAL. I got it off of a Jim Cramer show. It was the stock that he liked that day. It wasn't the first stock I really cared about, though. The first stock, I want to know if you remember this one, Joel. Vringo, VRNG. That was the first stock that I really cared about and was on all the forums about. Do you remember that one, Joel?
Is that the one you did the report on, or was that? I remember during one of your internships, you wrote out about a stock and a long-term buy. We were doing an exercise. I don't know if that was it, but
probably,
VRNG.
Yeah, it doesn't exist anymore. So we'll start there. But it was $100 million stock, market cap. They were suing Google for $100 billion.
Oh yeah.
So it was about to be 1,000 bagger. I was very convicted in that thesis, and stock doesn't exist anymore. We'll leave it there. But Halliburton was the first one that I bought.
Halliburton, Luke, you didn't even know before I told you like 2 weeks ago that Dick Cheney was the CEO of Halliburton.
Yeah, well, you told me two. Yeah, okay.
I told you 2 weeks ago. You didn't even know that. That was the first.
Okay, no, I was gonna say you told me 2 days ago. That makes it even worse for myself, so I stopped.
All right, moving on here. I did want to talk about Kellogg's. We talked about this on the pre-market show. Kellogg got the Beyond Meat headline on Wednesday. There, they got a note in, I believe it was Barron's, right, noting that their Morningstar Farms brand also makes Beyond Meat type of burgers there. Motley Fool with an interesting comeback there, basically noting that the Barron's article failed to note that the biggest difference between Kellogg's Morningstar Farms and Beyond Meat is that the Kellogg's brand, their sales aren't exactly going through the roof. When we can see that, because we know how much money Kellogg's is making, we know what percentage of sales Morningstar Farms makes up, and we can see the sales aren't growing. So, nonetheless,
been around for forever, Spencer. Correct? Like I remember eating that.
Yeah, right. But it was more of a note like, hey, they also have a Beyond Meat type product. So we broke out here, Joel.
We did break down. We went to, well, first before I do that, I do eat the Morningstar breakfast sausages, and they're not bad. They're not bad at all. I don't know about their but I'll tell you one thing. We grilled last night, as you're supposed to on the 4th of July. And I said, you know what? I'm going down to the butcher. I'm getting some fresh hamburger patties, and man, they were good. So I don't know where Beyond Meat's going in 2 days or 2 weeks or 2 months, but might cut down on the burger and the beef consumption, but there's just really no substitute. The S&Ps did break down. And as I mentioned, that 91.25, not even a good place to cover short. We went down to 29.84. That's still above Friday's inter-day low here. So now we got to do a reset on the numbers here. And your mid-range comes down to 29.94. That quick pop, they wouldn't come and get me at 28.98. So now I have to reset here and lower risk short here at 29.94. We do have a full day of trading. I see the banks. I see Bank America kind of holding its bid here, up 20 cents. That's doing okay. Goldman's in the red by 41 cents. I have not looked at the TLT, what kind of indicator that is. TLT's in the red, but, just rebounded off the lows of the session. And back to Kellogg here. You are getting some follow through here in the pre-market trading, and you are trading up a few cents here. I would just say, man, these pair of highs here at I'm keeping a real close eye on 57. We stay in the 57 handle. That's near, the top of yesterday's range. I think we bump up perhaps maybe make a run towards 58. But there was a couple other highs at 57 back at in the middle of June. So it's 10 cents 10 cents above there. Important to hold 57 in Kellogg's. Now, Luke, you know where Kellogg's is from, right?
Battle Creek, Michigan.
There you go. There you go. We should do an old Michigan show one day. But
Yeah,
suppose that bounced off the low.
Luke, you had something.
Yeah. Okay, Joel, I've got a question for you.
Sure.
So we're talking about the markets at all-time highs. The S&Ps are up about 9-10% for the year.
Yes.
Or over the past year. Small caps are actually down almost 10% over the past year. Do you know what's up with that, or does that?
You know what? I don't have a lot of exposure to the small cap market. I really don't. I don't want to say that I don't pay attention to it. It just seems like
I can tell you what's going on.
Go ahead, Dennis. Go ahead.
ETFs. How many ETFs are launched? 9 out of 10 that are launched are holding all your mega caps, or they're holding all your names. It's not sexy. So you're not seeing a lot of interest in small caps and mid caps because they're not sexy. So this market is ETF driven. And as you have more and more ETFs come on board, those are the stocks that are going to be traded more. Those are the stocks that have more interest. Those are the stocks that have more natural buyers, because as people launch these new ETFs, they're buying those stocks. Those smaller caps names just aren't widely followed. They're not sexy. They're illiquid. So institutions aren't interested in them either. So it's a lot more difficult. So in the long run, small caps have always outperformed mega caps. I don't know if that's going to be the way going forward for the next 50 years. I'm not sure, because there's so much focus on the major names. People just don't trade the small stuff. It's very difficult to trade the small stuff too, just because of off exchange market making. Things are illiquid. So and then it's just they're not widely followed. And as you get more and more ETFs that come online, there's going to be more interest in those stocks that are in those ETFs, and people aren't putting these small cap stocks in those ETFs.
And Dennis, why is that different from the boom of mutual funds when all the mutual funds got launched?
You're going back before my time, really. So I mean,
if you're a scholar, we all know Dennis is a scholar. So.
If you're talking like back in the 80s and 90s when mutual funds, you got to talk to Joel about this one. So I think you might actually be going before my time too. So I don't know if I can comment on stuff that was happening when I was like 5 years old. But when are you talking? So what are you referring to when you're saying the boom of mutual funds? Are you talking back in like?
Yeah, exactly. When mutual funds became the hot sexy investment vehicle.
This was 80s and 90s. In the 90s, everybody was talking. Yeah, the mutual funds are the best way. The difference with the ETFs is that they're also traded too. So there's impacts that they have directly on the stocks. When you have a mutual fund, there's their passive holdings. The ETF itself trades. So it's a little bit different, dynamics. And I've talked about this on the show before too, where we do these under the hood segments and we look and say, hey, you look at the Qs and you'll see, okay, well, you're getting, you've got Facebook maybe having a really good day and Amazon having a really good day and Apple having a really good day. And you're like, the Qs don't seem to be up enough for it. So what stocks do they go and sell? The non-tech components of the Q. So they hit like Starbucks and they'll hit, all these other names. There's like 20 names in there, like Kraft Heinz is part of the Qs. People don't realize that. So they'll hit like all the Mondelez, they'll hit these names. So, and they call it sector rotation, but a lot of times it's just the ETF arbitrage. That's the way it works itself out. The ETFs have so much effect on this market that nobody even understands. I know this because I do ETF arbitrage for a living. So I know how this works, but majority of the population doesn't even understand. They think, the ETFs, as they continue to get launched, it has a major impact on the stocks themselves as well. And if you're launching, every day there's a new ETF coming on that's got FANG in it, those stocks continue to get bought because of that. So I don't know what happens. I don't know what happens when, you get, a certain amount or a certain sector, maybe Facebook, Amazon, Netflix, Google, a few of those stocks start to have some rough times. What happens with the ETFs, they're going on, does it cycle and does it cycle away from them? Right now, it's the same stocks because those stocks have continued to work. And those are the ones that people want to buy. Those are the ones that, are sexy enough to sell to an investor if you're launching an ETF. But, from your original question, that's why I believe, the mega caps, have outperformed the small caps in the last while.
While we're on the topic of ETFs, I want to recommend a podcast that I love, Trillions. It's from Bloomberg. It's an ETF podcast. There's one episode a month. It's like a half-hour episode once a month. and it's an ETF podcast. I highly recommend it if you're as into ETFs as I am. Listen to it on your way to work, on your way home. It's about a half hour, 40 minutes. They had a great one, Dennis, that I think you would appreciate about these when you see these suddenly large inflows or outflows into an ETF at the end of a month. It's basically a tax implication, a tax trade, but they sort of got under the hood of why some ETFs have huge inflows and then all of a sudden huge outflows. Really in a very short amount of time at the end of a month there. But a great podcast, Trillions by Bloomberg.
We
856.
talk about that too.
Yeah.
That's, the seasonality that I know Rob Friesen at Bright talks about this stuff with his traders all the time. There's something to that too. I mean, so I'll say that there's a lot of impacts ETFs have on the markets.
All right, 8:56 here. We got about 4 minutes left in today's show. If you have a, guys, let's talk about Deutsche Bank. Deutsche Bank is in the headlines a lot here. They're doing
what's going on?
they're doing some restructuring. They're supposed to cut a ton of costs, let a lot of employees go on the U.S. side. They're supposed to take big steps back out of some major industries, in the markets. So they're going.
Their investment banking division just left.
Yeah, they're scaling back in the U.S. big time here. So you'll see them in the headlines if you haven't already for the next couple of days or weeks. They're doing that. Haven't looked at the chart in a minute, guys. Thoughts?
Well, if you're looking at the chart, you're getting a little bit of pop out. Just keep in mind, all this information has already been processed and traded on the overseas markets. You're trading up 22 cents here at 8:03. I mean, if you want to rush out and buy this on this news, go ahead. But I mean, just the longer term, if you look at the overall historical performance in this start since the financial crisis, I mean, it's hands off. And, despite this little pop today, seems to me they've done other things like this, over the years that tried different strategies. It traded 8:03. I mean, nothing for me to get excited about here. Dennis, you seen anything in the Deutsche Bank chart?
I mean, it's hard, and like you made a good point, this is already traded. This is why I don't focus on, some of the European issues, because I'm not up at 2:30 in the morning. They're not traded over here until they start trading at 4 o'clock. But for the most part here, the price discovery session has already happened. I mean, the stock is trading higher. So people come in here and say, oh, there's going to be some big movement. Well, Europe's been open already for 4 or 5 hours. So, the big movement has already happened over there. So there's no reason for me to come in here and say, okay, I think there's going to be a big move in Deutsche Bank either way. The overnight move has already happened. So, we talk about this on interlisted stocks. The stocks are trading over in Europe. The price discovery has already happened. So, it's trading up and it's having a good morning here, 8:04, 8:05. Longer term perspective, I think there's still a lot of issues there. So, they're trying to restructure. They're trying to do a lot of things. This is a stock that was what was the all-time high? $190 or something? What's the all-time high in DB?
Oh, let me just zoom out on my.
I mean, over the past 5 years, the stock's down 80%.
Yeah, but if you go even further, the 5 years before that, it was down 80%. The 5 years before that, it was probably down 80%. People don't realize you can keep going down 80% every 5 years. You don't ever get to zero. It just keeps getting smaller and smaller. The basis of it keeps getting lower and lower. But I think it was in $190. I'm just off my head.
I got 152.80.
Okay, so $152. It's $7. It's $8. I mean, you're so far off those all-time highs. They've never recovered here. This is the reason. Deutsche Bank is the reason that I am underweight financials in my long-term portfolio, because I don't know what is happening still over there. I think it's the wild card. I think it's eventually maybe the cause of financial crisis part 2. So I'm not getting on board with buying what I believe could be the catalyst for the next financial crisis, or at least a start of it. Deutsche Bank has major issues. I don't want any part of it. And I'm actually scared of other banks, especially other European banks, because of Deutsche Bank.
Yeah,
Waiting for that.
Sorry, that's my opinion.
I was going to say, waiting for that reverse split. We know it's coming.
Well, who knows? I know
we know it's coming.
Well, maybe they won't do that because it's traded at different prices over in Europe. But I mean, we've seen what happens when the stocks reverse split here too. Rite Aid just did one there. And obviously it had a little bit of a pop after, but these reverse splits are just an excuse to sell the stocks again half the time.
Luke, what do you want to add?
We're running out of time here. Final summary from Luke here. Give us your thoughts here. We've got hit on this. So we're going to take off your investing hat for a second. We're going to put on your trading hat. We got hit pretty hard on this jobs number here. Joel's saying the interest rate July might not happen here now the cut. The market is saying they're a little more nervous about it because they're buying the banks and they're selling everything else. Thoughts here from Luke.
All right, final thoughts from Luke. Don't take these with any credence. We're gonna have light volume today. People are happy or joyful after the holiday. There's some jubilance going around. We had the big job number. I think we cracked the high today.
What high? What high?
We're going through, what is it? Wednesday's closing price today. We're finishing higher.
Okay. Lunch. I'll go lunch on that.
All right, lunch.
Okay. All right.
So you're bearish, Joel.
Well, we're not rallying back and close. I don't say we're not, but I just think, this far, 20 handles off the pre-market high. I think everyone that didn't sell on Monday or Tuesday or Wednesday will use this as a little bit of opportunity to lighten up, because the interest rate situation, we went from a half. Oh, we're going to cut a half. Oh, we might cut a quarter. Now the quarter's down to less likely. So the interest rate cut that this rally was predicated on is not happening. So there has to be a re-asset allocation on this. So I don't think we're going to get
I think
killed.
it's still happening. I think it's the next one that might not happen. So
Okay.
I think July is still going to happen. That's what my thoughts are. I think the next one, might not happen as quickly as the market would like.
Okay.
All right. On that note, thank you to today's guest, Donnie Hensley. Thanks to all of you in our chats. And thanks to Luke Jacoby, Benzinga's Mr. Everything, for joining us throughout the hour. We appreciate your time, Luke. I know you've got a busy day ahead of you, busy schedule, full calendar, lots of meetings. So thanks for taking some time to spend with us regular
We want
people.
him back. Let's get him back soon.
Us regular people.
I like this long-term investing time too.
What Spencer's not telling you guys is that I've been asking him to do this for several years.
Luke's been trying to come on
It's
here.
true.
He's been in
It's
the
true.
queue for several years, and
true.
for some reason he keeps getting bumped.
Yep.
You gotta
Yep,
bring
it's
him on more.
It's true. Something does always come up at the last second. That's something being me. But in any case, if you missed any part of our show,
He was your first friend. You should give the guy
and you dissed him, and you won't let him come on the show.
your first
Whoa.
Michigan friend that takes you out to eat crocodile burgers.
Yeah.
Not every friend will take you out to eat a good crocodile burger.
It's true. All right. Yeah, I think I still owe Luke money for that one. But thanks to everyone for joining us today. You can catch our show, our podcast. All the information on our show is meant for informational purposes only, not meant for investing or trading advice. Everyone have a good weekend. We'll be back with you on Monday morning. Have a good one.